Well, what a difference a week makes. Interest rates on some new federally backed loans for college students are now double what they were last week. They have jumped from 3.4 to 6.8%. All right, what does that mean in real dollars, and are there other options? Financial advisor Rick Bloom is here to help us sort it all out for us. Thanks for being here, Rick.
Thanks for having me.
Which loans are we talking about?
We're talking about subsidized Stafford loans, which really goes to kids from low-income backgrounds that really need the help in getting a good education.
We talk 3.4 to 6.8%. Over the cost of a loan, I'm understanding that that is like an average increase for someone of $2,600
per year that they're going to have to get these loans for. It's a huge cost that kids are going to have.
We're hoping that when Congress comes back for the break that they will, kind of pass an extension of the 3.4%, at least for another year. But as you say, always plan for the worst and hope for the best.
Exactly, because we know dysfunctional Washington. We have no idea what they're going to do.
So let's talk about some alternatives. So if you don't have to do this, are there other ways that parents and kids can try to plan for college education?
There is. First of all, you can look at community colleges. You could say, you know what, maybe for the first year I'm going to go to a community college, stay at home, costs are a lot less. Two, what you can also consider is look for non-traditional sources of borrowing. There's a good website, finaid.org.
FINAID.org, right?
Right.
Okay.
And it has all sorts of places you can go get loans at less expensive rates. You can also consider for families may have a home equity loan or refinance their houses. Interest rates are low, they could refinance, pull money out, that money's tax deductible. It's a lot cheaper than they're getting at the 6.8%.
I think that idea scares some parents, but
it does.
In reality it may be a better financial option.
It is, especially for parents who want to assist their child through college. It's a much better way of going. They can deduct the interest, they can lock it in so they won't have this same problem, even if there's a workout a year down the road, having another issue.
We were just talking right before we went on, and you said to me something shocking. I'd be surprised how many 50-year-olds you said who are still paying off student loans. We're taking out an incredible amount of money to go to college these days.
Do you know that other than home mortgages, we have more outstanding debt in college loans than anything else? Even charge card debt right now?
Really?
That shows you the problem that we have in this country. And so people pay for it 20, 30 years after they graduate college, they're still paying on their student loans.
All right, and again, we should say this is the federally subsidized Stafford loan, so not all loans.
Not all
just
loans.
A select group of loans, but a lot of them.
Exactly.
I mean, that affects a lot of people.
And that's what students have to do, start looking for non-traditional sources. A lot of websites like that, finaid.org, great sites to go to. Start the search now.
Rick?